This morning we are talking about the property report that everybody has been talking about. Fitch Ratings warning about potential risks in the Dubai real estate market has got a lot of people in the real estate market talking. It's made a lot of column inches. So we've gone straight to the source. Redmond Ramsdale is the head of Middle East bank ratings at Fitch Ratings. He's got up and joined us from London this morning. Redmond, thank you so much for speaking to us.
Thanks for having me.
So the forecast that has got people talking here was, and you know the report that we're talking about, the suggestion that a moderate Dubai residential price correction was likely. What's behind the theory?
Yeah, thanks for having me, as I said, Brandy. Look, we have seen really quite strong performance, as everyone knows, in the UAE property market, and that's particularly in Dubai, where prices are up 60% since the end of 2021. A third above that peak, and those fundamentals make a lot of sense because obviously we've seen favorable economic conditions, strong population growth on the back of structural reforms. We've seen strong capital inflows with the Russia-Ukraine crisis. Generally, we've seen very strong investor confidence. But as you said, we now think we're close to the peak and that a moderate correction is likely. And that's quite simply because we are going to see very significant supply come on stream. So there's going to be very big handovers this year and next year. And we just don't think that demand will keep up with that significant supply. We don't think that the population increase will continue at the same clip that we have seen over the last three and a bit years. And we don't think that the economic conditions, i.e. slightly lower oil prices, slightly less favorable economic conditions, will be quite as we have seen. So we think that now with this supply demand sort of nexus, that we're likely to see, the top and a moderate correction.
Okay, let's have a look at some of the factors that you've based that on. Why do you think the population growth is going to slow down?
Because quite simply, we've got lower oil prices. We're not going to see the same inflows. You don't have sort of some of the same scenarios, such as the Russia-Ukraine conflict, i.e. it's not starting. A lot of that's already happened. The structural reforms, the visa reforms have happened. So effectively, what we saw in the past was a really strong correlation between property prices and oil prices, and now we are seeing oil prices around 67. Fitch has revised its forecast for this year to 65. We also believe it's going to be 65 for next year and the year after. So what we're really saying is the fundamentals just are not going to be quite as strong as we've previously seen.
We are talking to you on the morning, though, that the World Bank has just revised its forecast for the UAE up this morning for both this year and next year, nearly a full percentage point next year. They've done that on OPEC, turning the taps back on a little bit more, certainly. But they've also done that on the non-oil economic growth and the diversification here.
Yep. Absolutely, and you're spot on. Non-oil growth is strong. We are still expecting for the UAE for this year, for the banking system, about 9% sector growth. Now that number is really strong, and that talks to exactly what you're saying. Conditions across the Gulf still remain very solid. So we're only talking about a moderate correction. And as I said, prices have gone up in the last 3 years by 60% in Dubai, and we're expecting a correction of no more than 15%. And probably what is very worth me saying is there are different levers that could, potentially reduce that 15% correction. If we see changes to payment plans, if we see probably most importantly, or if we see cost optimization, but probably most importantly, if we see a slowdown in the handovers of property completions. And there is a track record for smoothing supply. So if those things start to happen, then that moderate correction could actually be less.
Which is interesting, because one of the things that you say would be almost better, and I'm paraphrasing here, but a delay in handovers, projects not being delivered, would keep prices higher. Ultimately, though, if that was to escalate, would that not become a bigger systematic risk?
I mean, everything has to be a balance. So we would, it would need to be sort of, a moderate slowdown in supply to kind of better match demand. If things got pushed back significantly, then yeah, that could change the dynamics quite a lot.
Do you, and I've seen a couple of lines suggesting that some of the higher end property and investors that have the luxury of a longer term outlook staying more stable, holding its own in your report. But one point that has been made in the many column inches that you've generated on LinkedIn and the like here as a result of this report by those in the real estate game is that the market here is no longer homogenous. We've got old stock, we've got new stock, we've got inner city, we've got suburbs, we've got built, we've got off plan. When you talk about a correction of up to 15%, and that's your floor, are you distinguishing between those sectors?
Okay, so again, very good point. We made it quite clear in our report that not all assets and locations are going to be equally impacted. Absolutely, will prime locations and prime real estate, prime buildings be less impacted. We're talking about an overall 15%, up to 15% correction.
Do we need a correction? Are we running hot?
A 60% increase since the end of 2021 is significant. You don't see many real estate sectors going up that much. Obviously, that is Dubai. Other Emirates are still strong, but significantly less than that. Again, it's not our opinion or view whether we need a correction or not. It's just our opinion that we are likely to be at the top and that some type of moderate correction is coming over the next 18 months.
1 minute left with you. Is there any possibility that it could be more than moderate? I say that because we've had that global downgrade this morning from the World Bank, particularly the US. There's talk of higher interest rates for longer. Obviously, we're very tied in with international buyers to global sentiment. Do you see any more downside risk?
Again, a good question, because we heard a lot of commentary about this as well. People are going quite hard on either side here. I mean, look, our view is that it will be, up to 15%. And that's because if you look at the real estate developers, they're in a much stronger financial health than you saw in the previous downturn. So higher prices, more off plan, that means better cash flows, that means less indebtedness. Obviously, I look from a bank side, better underwriting standards from banks, lower exposure, again, better cash flows from these exposures. So we look like we're in a better place than we were before. Better regulation as well.
Redmond Ramsdale, he's the head of Middle East Bank Ratings at Fitch Ratings, speaking to us this morning. Thank you so much for your time.
Thanks.